Hello everyone, it's me, NYSEinstein for the Florida New York Stock Exchange, May 15th. 8 days of up markets, re-rallying about 1,500 points. Positive news, negative news, geopolitical, interest rates, whatever, market kept going back up. We broke the downward trend and the market felt good. We were approaching 25,000. The last time we saw that selling stuff was all that negative narrative that flipped everything on its head about lack of global growth and inflation and this and that. That was followed by 8 consecutive days of an up market. People finding value. Markets sold down in the morning, they rallied by the end of the day. They were up, they closed up higher. Today, so we get to a point where we really need a reason for the market to go higher after it rallied 1,500 points, or we need a reason for the market to go lower, and today we found that. So let's not spend a lot of time worrying about the headlines that now the Dow's negative for the year, and now we've broken the 8-day winning streak, and all that stuff. Let's look at the facts. The facts are that retail numbers came out super positive. Manufacturing numbers came out super good. 2 positive economic data blips. That spiked the yield from 2.98, I believe, to 3.06. Big spike, spiking yields, sell-off in market, inverse relationship. All this being said that these are inflationary things, positive economic data, which lead to the potential that they may raise interest rates for sure, which is already a 70 or 80-30, 80-20 posturing for June, and that this will put pressures on equities. So in fact, that's the scenario, that's the fact. Positive economic news, slightly inflationary, probability of raising interest rates a little more likely for June, and the market sells off. We sold off 200 points, we were down probably 350 at its peak. Is there anything to say that those who are in it on a short-term trade would want to take some money off the table? Those who are in it for a long-term trade may want to take some things off the table. Maybe it's just a one-day event. Maybe once they start spinning the negative scenarios, which they did, that it was worth making a sale for the day. Maybe, in fact, it was a buy-side scenario, because near the end of the day, it did rally fairly hardly, about 60 points in the last 15 minutes of trading. All that being said, one day does not a market make. 8 days of positivity does make a market. One down day does not. Let's see how it follows through. Tomorrow's Wednesday, hump day. It's the middle of May. We've got a lot of rebalancing coming into the end of May. Earnings have been fairly solid. Guidance has hit some headwinds, but seems good. Is this a real rally and this is just a deviation? Is this rally something else and this sell side is actually what's going to be the posturing for a while? Is it the fact that we rallied 1,500 points off of sort of a broken 23.5 level, and that was significant, that was the buying opportunity, and that basically all good things come to a slight end? Was it some economic data that just sort of spurred a little bit of a sell side, profit taking money off the table? I kind of think that's the scenario. So let's not read more into it than that. Let's not spend crazily positive stories or negative ones. Let's just say for today, we're down 2 after being up 15. I'll take that any day on probability. I love you all. NYSEinstein from the Florida New York Stock Exchange. It's 4:36 on a Tuesday. It's a sunny day outside. I'm going home. I love you all. Inside Wirtschaft. See you tomorrow.